Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Friday, May 8th, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. On the market situation, the market today, folks, first of all, there have been some great news in Europe because the conservative government, the Tories from David Cameron, won the election. This created some kind of a volatility, some uncertainty yesterday. But finally, David Cameron won the election, so there will be a continuity of its policies for David Cameron. Also, the news that we have today is about the U.S., where finally we had the employment report that came out in the U.S. The employment report showed that the U.S. created 223,000 jobs. That's slightly above estimates of 220,000. But what does this say? This says simply that with this situation, the job creation that we had, it's good. It's not good enough to say that the Fed is going to raise interest rate in June, and it's not bad enough, which means that it just confirms that the job creation on March that was really bad, it just confirmed that it was just an anomaly because actually the US had a tough winter, so less people were willing to hire. So with this situation here, investors are kind of feeling a little bit more optimistic, because the job report is just okay, not enough to make the Fed raise interest rates sooner. That's what they think. And right now we have it reflected on the market, with markets having a rebound and the SPY testing its resistance. However, as long as we remain within this important neutral range for swing trading, folks, it's going to be the word patience. It's not a situation where you should either buy some positions, neither short some positions. I think with this situation, though, it's so neutral, we don't believe that this rally could actually continue and have the SPY breaking that resistance today. And this is why on MarketGurus.tv that you can have access for free for 10 days. When we had this first correction that started on May 5th, we actually recommended some bearish ETFs such as SPXU and also such as HXD. Yes, today those ETFs are taking a hit. They're having a correction, but we're willing to be slightly patient on those ETFs because we believe that markets are neutral. Most sectors are neutral. There are not enough sectors into a bullish cycle to close those bearish ETF. So if you bought bearish ETF, I don't think you should panic. Continue to hold on to those bearish ETF. And when I say that it's important to not rush your move for swing trading, I'm talking also of a particular sector that you guys follow a lot, the gold sector. Look at the sector situation. We're in a situation where we continue to remain neutral. This sector here, it's a sector where as long as we stay within 171 points and 160 points, it's not appropriate to open any new position on the sector, because by opening and selling some positions within this other information, you risk being caught in a lot of false signal. Yes, there are some stocks that are going up today on this slight increase, but it's not enough to be able to day trade until 170. So there's not enough gains to be made on that sector if you want to day trade it. So we believe that there are some stocks that could be interesting. For instance, Kirkland Lake Gold will be a nice breakout higher than 622. However, we need to also look at the sector, which is still neutral. Concerning energy, there's one question concerning energy here from Bob. Bob said, any news making energy stocks go up today? Thanks. Well, I don't see any news that makes the energy stocks go up today, but we found nothing. However, what we have to say is that, first of all, we have natural gas that's clearly breaking an important bearish corridor. I believe that natural gas is a nice buying opportunity for a target of 1463, 1470. So to trade this movement on natural gas, you have two ETF, either HNU or UGAS on New York. But as I said, if you're opening some positions today on natural gas, your target becomes 1479. This is the point where you're going to have to take some profit. Now, for the energy sector, I think it's purely a technical, this rebound that we have, because we had 4 days of decline of almost 200 points in the market. So I think we're starting to see some investors buying some stocks, but this rebound still remains fragile, and the sector just got back into a neutral cycle. So with the sector that's starting to be back into a neutral cycle, are there some positions that we could start to monitor to buy at the bottom? I think there could be. Those are the two indicators I think you should look for. Let's take a look at a stock like Encana. First of all, technically speaking, by not looking at the indicators at all, this is a stochastics, 930 stochastics, you see that the stock has tested an upward trend, right? Because if you connect all those bottoms here, it does make an upward trend. Now, to confirm some stocks that could be great buying opportunity at the bottom, a stock like Encana, technically speaking, it has tested its upward trend. But now let's take a look at the technical indicators. 930 stochastics, what does it say? So far, it's not around the 40% range. So the wave of buyers that allowed Encana to rebound is not strong enough to say, you know what, let me buy Encana right now on that position to be able to maximize my gain potential, because it's not really convincing on the stochastics. Another indicator you could look for is the MACD histogram, 728.7. You see, so far the MACD histogram is starting to tilt towards positive territory, but not there yet. So I think Encana will be a stock that could be watched for a potential bottom. However, I'd like to see the energy sector confirm a clearer neutral cycle and even slightly reversing its downward trend, because if it does rally until 235, it's not going to be as interesting to open some position, because we don't have too much points to be gained there on the energy sector. So you also have to take that into account, though. I think what you should do today on the energy sector with this first day of rebound is to see what are the stocks that you have a stochastics that's tilting more towards the overbought situation, and you have the MACD histogram that is actually more into positive territory. We saw an example in Encana, and I think with those two indicators, that could give you actually a better clue of the stocks you could put on your watch list, or you could buy if ever we have a reversal of this downward trend, and if we have the energy sector that can go above 234 points. So that is my strategy. Now, Taz has a question. Please explain how on volume balance indicators works to find a buying signal. Well, it's actually an indicator that we use to determine in terms of the volume. So first of all, I think one thing you could take a look at is to see, for instance, on marketgurus.tv, what we have is that every day we publish a list here of all the stocks that are about to be breakouts or breakdown. So when a stock is within a neutral cycle, using the volume imbalance allows you to see if within this neutral cycle, if there are a lot of volume that are being traded. So on marketgurus.tv, you can make the free trial. Every day we have that list. So take a look at that list. I take a look at that list and I find one stock that's pretty interesting. It's Goldman Sachs, right? Now Goldman Sachs, now this is the volume imbalance. So the stock is still neutral, right? Because it's bounded by this resistance here and this support. And what does the volume imbalance say? It says that Goldman Sachs right now, it's staying neutral, but we see that there's a lot of surge on the volume imbalance there. So it seems like there's a lot of heightened activity in the volume. So getting into Goldman Sachs right now might be not as risky as another positions. I don't know, like there could be other positions where we don't have this heightened activity. And for me, Goldman Sachs so far, by looking at how the volume imbalance is performing, going up, going up, going up, but also continue to maintain a short-term upward trend, for me, this is a signal that on Goldman Sachs, the buyer's momentum is there. So if you're getting into a stock like that, that's within a salary formation, where you have a volume imbalance that shows a heightened activity, for me, that is a signal that Goldman Sachs is about to break out higher than 201. So that would be a buy, or you could get in within the salary formation, feel comfortable to hold on to it as long as the stock remains above 195. So one thing you could do is take a look at the volume imbalance, see if within a salary formation, do we have an increase in the volume imbalance, and that allows you to get into a stock before it confirms and breakout. It doesn't always work 100%, but usually I think that when we have those neutral formation, an increase in volume imbalance, this is where we tend to have the most explosive signals. So we're gonna take a quick break and we're gonna be back.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back. So Eva has a question here. Is the day trading class also for those with experience? Yes, it's a Michel. It's a French class that we have of day trading. It's on the French website of Decision Plus. Yes, there are different segments out of this class, if I remember, out of this course, if I remember right. And there's a segment where I think at the end of the course, there's a segment that's dedicated for people with experience. They're gonna share that with people in the class room. So yeah, so I think you can find more detail on the website, on our website, and take a look at the class here. I would say that it varies. It's not only for people with experience. I know there's a particular segment when people of experience will share the insight, their knowledge with people from the class, and but I know that also people who attend this class have been people that were beginners, from people who had 10 to 15 years of experience. So Michel has a great way of making sure that he can talk in a simple way. So you could be a pro or not a pro, but you'll be able to understand his language. Now, would you think Sherritt is a buy for 2 days? Well, first of all, Anne, look at this on Sherritt. Sherritt has rallied so strongly, right? So stock goes from 210 to 310 in a matter of 2-3 weeks. So almost 100%. So what are the probability that a stock that has already surged by 100% can allow you to make a 5-10% in the next 2 days? It's getting really unlikely. How you could see that? First of all, volumes are slightly declining, right, on Sherritt International. How do you see that? Stochastics here totally overbought on Sherritt. How do you see that also? We see that we're starting to get really, really, really far away from the 100-day moving average. That's around there at 245. So that's actually, those are all signals where buying Sherritt today will not be that appropriate to make you to make a good amount of money in the next 2 days. I believe that right now Sherritt, look at this on the Fibonacci retracement, we have reached right now 38.2% of all that fall. So I believe that if the stock could stabilize around this area, I think it will do so for the next few days and confirm another breakout higher than 333, 328 approximately. Now you have a potential until 351. The risk is that by buying Sherritt right now, you risk having to tolerate a correction on that stock until 290 or even lower on Sherritt, because a stock that has performed so well, if ever there's a market sell-off, well, people are going to start to take some profit on their best performing positions, and Sherritt has been one of them. So for me, Sherritt, I don't think that it's an appropriate timing to buy that stock right now. First, overbought situation with the stochastics. Second, volumes have been declining on Sherritt. Third, the stock is so far away from its 50-day and 100-day moving average, so it's really likely that we're going to have a slight correction. And also, by taking into account the Fibonacci retracement from that top to that bottom, we have reached an important point of 38.2%, and this is why we're starting a stabilization phase. So I think it has to be put on your watch list. It's not a buy for now, has to be put on your watch list. Wait to see if the stock could break 316, 314, maintain that. I believe that it's better if you could wait for the stock to stabilize, confirm another breakout, and if it does, your new target now becomes 347 to take some profit on Sherritt. So that is my strategy on a stock like Sherritt, but it's not a buy for now. Now, could KEG go above 275, about 2,500 at 260? Could it go above 275? Oh, okay, you mean this resistance? Could it? Well, okay, you see what? Let's take a look to see what does the volume unbalance is showing us, because right now the stock is neutral. So volume unbalance, what does it say? We see that we have seen an increase in volume here, volume unbalance indicator, while the stock stays neutral. So by just looking at the volume unbalance, I would say yes. However, it's in the energy sector, a sector that's actually okay today, but not as strong. The thing is, the good thing is that the 10-day is above the 30-day moving average, which is also a clear bullish signal. Now, do I think it could do so? We don't have an overbought stochastics yet because it's around this area. So we're close to it, but not there yet. So for me, KEG, looking at the volume unbalance, it has been increasing while the stock stays neutral. Looking at the moving average where the 10 is above the 30-day moving average, which is a good thing, it's also positive. So could it go above 270 and go above 275? I believe it could. I think that you got it at the right price. Make sure you put your exit point if the stock reverses this upward trend. So if it goes below 240, right, that will be the point where you should get out. But it's a good entry point you had, Al. And whenever you can take some profit, 5% or so on that stock, be quick to do it on key energy services. But you got a good entry point, and by looking at the indicators, I think it could go above 275. Now, for the best day trade of the day, folks, we had several ones. We had Kala today. It is our day trade of the day. One entry point here, one there, another one here when the stochastics was tilting towards the overbought situation. The next entry point is going to be at 1381 on Kala. There's also been Crew Energy on the TSX, but Crew Energy gave an entry point here. You could have trend trade that stock. Now it's overbought. We have a selling pressure, so if you got in within this upward corridor, it's time to close that position. And to finish, there's BAK that was active too, right? Gave two to three entry points, BAK, but since then the stock is staying neutral. Next entry point around 980 on a stock like BAK. But our best day trade of the day, it's that stock on NASDAQ, Kala, a 41% increase on that stock. So that said, see you next week. Today, folks, we have markets that remain neutral. For swing traders, you have to remain patient. I don't think it's an appropriate timing to buy a lot of positions. The positions that I've answered today in terms of the unbalanced volume, the KEG, for instance, or Sherritt, we see that most of those positions so far remain neutral. So there's not a lot of new breakouts, neither breakdowns on the markets today. And I still think that the best strategy remains to day trade, and Kala has been our best pick of the day for day trading. So I wish you all a good weekend and see you next week on the Swing Trading Show.